Welcome to our online demonstration and tutorial of Swingscope 6 version 4.0. Today we're looking at the May contract for the commodities sugar. The date we're looking to trade on will be 3/16/2004, and you'll note in the upper right hand corner of Swingscope 6 the date quoted will be 3/15/2004. Let's get started. There are three simple indicators that I look for when trading a futures market: the direction of the market in the last 5 days, the score indicator on our scorecard screen, and the EMA indicator on our charting screen. Let's locate these now. Right here on the front of our very first screen, you'll see that the market is swinging 77% up on average and 23% down on average. This denotes that the trend is to the upside. Right here on our scorecard screen, you'll see that the market is again trending to the upside, denoted by our quantitative score of 6.74 to the upside and 4.66 to the downside. You can also see a suggested entry point for the next day of trading of $6.67 through $6.69. You can also see that this position is ranked at 4 stars. The yellow star indicates needed volatility in the market, and the other 3 stars, denoted in green, simply guide us that this is a long position. In other words, we're betting the market up. The last screen we're looking at here is our charting section. Here you'll see a simple candlestick chart based on the end of day prices for the last 15 days. You can see there are 4 red fear candles. This is the first emotion of the 2 emotions that run any market you're looking at: fear and greed. You can also see 11 green greed candles. This is a secondary confirmation to me that the market is indeed trending up. We're going to plug in the numbers that the market opened at on the next day: $6.74. We're going to plug in our EMA indicators also. Here you can see that the market closed on 3/15/04 well above our EMA. Conventional theory believes that any market closing above the EMA is said to be trending up. A market closing inside of this EMA range would be a market in a neutral position. A market closing below this EMA range would be a market trending down. Also, another unique feature of Swingscope 6 version 4.0 software is our imaginary candle. To the far right, you can see a 16th candle, an imaginary candle of what may happen the next day. Clearly, this candle is pointing up. This is another good secondary indicator to help you in judging your position. Now, we have all 3 indicators agreeing. The only thing we need is an actual exit to get us out of the position before we proceed and bet the next day on sugar. What I'm doing is plugging in our suggested entry of $6.67, and we've got a suggested exit of $6.78. Actual trading on 3/16/04 can be researched in any futures database. Sugar futures open at $6.74. Sugar futures done a low of $6.67. Sugar futures traded to a high of $6.82, leaving you plenty of space to get in at the suggested low of $6.67 and exit at $6.78 with plenty of room to spare. This constitutes an 11 point or 11 tick profit on the commodity sugar, which would have resulted in roughly a $55 gain on eNet Speculation's mini futures market, or an even greater gain were you trading full contracts on a conventional futures market. That concludes our demonstration of Swingscope 6 version 4.0, and thank you for your interest. Download a free trial of Swingscope 6 version 4.0 from www.digital-intuition.com.